So it's January 2024. Can't believe it's the new year already. Well, what's going on in the housing market? You know, a lot of people are talking about this year is going to be the year of fives. Five will be the handle, first number of mortgage rates. 5.5 million in total home sales in the U.S. and 5% will be the approximate home price appreciation rate. So I don't know if we're really going to get to five, maybe towards the end of the year. I wouldn't be surprised that we do see somewhere in the low sixes, but I think we're going to average somewhere low to mid sixes for the year. 5.5 million homes sold. I think that's probably a little bit of a stretch, seeing we were in the low fours for 2023, but I wouldn't be surprised we do see 5 million. And I do think in our area, we probably will see at least a 5% appreciation growth in home prices this year. I think it's very realistic, seeing that we still have a lack of inventory out there. You know, I talk to agents from other part of the countries, and they talk about, you know, demand. We've never had a demand issue. We've been pretty strong, you know, over the last few years with demand. Even with rates going up to 8%, the demand was still strong. So we have more of a supply issue. So that, you know, part of more homes coming on the market, that will help balance out the market there. You know, we talked about heading into rates. We are definitely on the downward trend. Rates right now are floating somewhere in the mid sixes, which is good. Like I said, I wouldn't be surprised. Maybe we touch somewhere in the high fives at the end of the year. But I think the Feds are going to watch, see what's going on with inflation, and they're going to take a little bit, probably to the first, maybe second quarter before they lower the Fed funds rate out there. You know, one of the things we talk about a lot of limiting inventory, and a lot of that is because a lot of people were in that 3% interest rate. So, you know, you have somebody, if they're at 3 to 4%, they're probably not selling. 4 to 5, they're thinking about it. And below 3, they're probably not selling at all. You know, so when we look at it, what will cause people to put their homes on the market? Most likely time, but as interest rates do come down, you know, when rates are somewhere in the mid fives, which I think we'll see in 2025, 2026, I think we will see a little bit more, you know, inventory come on, because the spread between 3.5 and call it 5.25 is not as bad as 3.5 and 7. You know, so people will start to make the move. It will be 6, 7, 8 years, depending on when they got their refinances. And they will start to make some of those moves, you know, out there and say, okay, it's time to make a move between life factors and not a big differential in interest rates. Lance Lombard, founder of Resi Club, said, "We might be at a peak lock-in effect. Some move-up or lifestyle sellers may be coming to terms with the fact that 3 and 4% mortgage rates aren't returning anytime soon." 100%. And I think people are just getting accustomed. You know, a year ago, people were like, oh, rates aren't 3% anymore. Now this is the new norm. You know, new norm is somewhere in the sixes, maybe even in the sevens. So if they dip even lower, it becomes even a nicer thing, and people are most likely going to, you know, come out of the woodwork with stuff like that. You're seeing a lot of those memes on social media of what's going to happen when rates drop into the fives. Erica Plemons, housing analyst, Bright MLS, roughly half of November buyers were going to buy regardless of interest rates, and another quarter purchased with cash. Cash continues to be king even as rates ease. Without a doubt, a lot of people said, I want to buy a house, I'm going to buy a house. At some point, we'll refinance, but I can afford the price today. Like I said, we don't really have a demand issue, and we're going to buy. Or they bought with cash, and rates really don't matter that much anymore, because even though you can get 5% on your money sitting in a CD or a 10-year treasury or whatever the case is, that's probably not going to last more than a few more years. So they're putting their money into their houses. Their family members are giving them gifts of equity. We're seeing that a lot. You know, a big reason why, you know, top the reason why buyers paused their decision in 2023, mortgage rates. Obviously, a lot of people did fall out of the market when rates went much higher. Inventory being low, without a doubt, it became frustrating. With higher rates, highest and best, low inventory, hey, you know what, let's just rent for a couple of years and until things stabilize. And then the home affordability kind of balances between the two of those. You know, we talk about why are rates, you know, where they are. Well, one of the things, not only from the Fed funds, raising the Fed funds rate, you know, we're seeing the spread between the 10-year treasury and the 30-year fixed rate at not its all-time high, but close. The current spread right now is 2.78, where the average spread is 1.72%. So when the mortgage market on Wall Street kind of stabilizes and Wall Street says, okay, we're going to package these, we're going to sell these, rates are generally going to be the same for a while, that will shrink as well, and that will bring down rates on top of what the federal government does. You know, home price forecast for 2024, I do think we'll see at least a 5% appreciation rate in our area. You know, with lower rates, and still not as much inventory, we are going to see probably some more highest and best, people bidding a little bit more aggressively with stuff, where, you know, in maybe 25, 26, when rates dip into the fives, you're going to see more inventory come on. I think we're going to see less amount of price appreciation, and we'll see some stabilization at that point. Maybe some price drops, but not a huge amount. Estimated home price performance, like we talked about, you're probably seeing 5% this year, give or take. Depending on what happens with interest rates in 25, 26, you'll probably see some leveling out, maybe those dips, but I'd say an average, we probably have anywhere 4 to 5% appreciation growth in our area over the next 5 years, each year. Selma Hep, chief economist, CoreLogic, with mortgage rates dropping, demand for homes in early 2024 is likely to be strong and will again put pressure on prices, similar to trends observed in 2023. Most markets will continue to reach new home prices over the course of 2024. 100%, I think that's going to be the case. So the reality of it is people bought when rates were 8%. People bought in 2008 when the market was collapsing. People buy homes that they're going to live in because it's something that makes sense for them. Investors will buy when the numbers make sense. We haven't seen as much on the investor market, plus to the lack of inventory, plus to the amount you got to buy stuff. But we're seeing that open up a little bit more. As rates come down, some of these multifamilies make a little bit more sense. You are seeing a little bit more, properties come on the market because some of these sellers are able to maximize. So if you're looking to sell, reach out. Let's see what's going on. Let's see what numbers looks like. How do we maximize? What's the best position for you? And if you're looking to buy, let's set up a buyer consult. Let's see what's going on. See if the right time is now for you. Or how do we position you? Can we get you into off-market deals? Is a co-op a better move for you? Let's go over all the details out there. But feel free, reach out. Give me a call, shoot me an email, DM me, send us smoke signals. I'm here to help. Look forward to seeing you soon.